Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So this morning we talked about the gap down in the market, about how there was some doubt about the potential debt deal going through after there was no deal hammered out over the weekend. But that turned out to be a buying opportunity today, as we were very strong during the session, finishing the S&P with about 0.4% of gains. You even saw the IWM, the Russell 2000 ETF, and the NASDAQ ETF, the Qs, make new highs. So really impressive action during the session today. Overall, not a big net change because of the gap down, but you look at the candlestick, it gives you a little bit stronger indication of the action. You take a look at the chart, taking a look at the SPY, obviously you can see we opened lower, almost with the lower open engulfed all of Friday's gains, but then we were strong during the session, as I mentioned. You could have potentially triggered another buy entry on a break above Friday's high, and we got a decent close above there. So, like I said, small net gain on the day, but impressive price action during the session. Take a look at the Qs, closed on their dead highs, right at new highs. So impressive action in the NASDAQ, especially after the technical damage that we saw last week. Really impressive to see this swift snapback in the Qs. Talk about the IWM, the Russell 2000 ETF. Even more impressive, breaking pretty well above highs. So be interesting to see whether the IWM can continue and extend away from those highs. And you zoom out on the chart, really strong uptrend obviously in place since mid-2011. Nothing with these debt negotiations have done anything to derail that. And talk about individual stock action. On tonight's recap, I'll focus a little bit more exclusively on stocks that we've mentioned recently in some of our products, and then I'll give you a little bit more information about the off-the-charts relaunch that we're starting after the close today. But Apple is obviously a high-profile name and a stock that we've been following as a potential setup. Take a look at the chart. The downtrend that's been in place is what we've been watching, and it's been a little bit frustrating recently because when the market's been weak, it's held up well, giving us some signs of relative strength and some hope that it could break out. But then when the market's been strong, Apple's been a little bit weak. So it's been choppy and sort of not trading with the market as it's been doing for a while now. But today, you got some follow-through to the upside. It wasn't down as far with the market this morning, opened around the flat line, did probe the 8-day a little bit, but finished positive, is starting to poke its head above this downtrend line. So you can draw the trend line here. As you can see, Apple starting to poke its head above and starting to look better. You have the product event October 22nd. You have generally solid reports regarding the new iPhone. So this is one that we're going to focus. I'm going to talk a little bit more about our focus and off the charts, about focusing on setups and being objective. But right now, Apple is one. It is a big name, but it's also one of the better setups in the market. So one to keep an eye on. WDC, Western Digital, is one that we've been talking about in off the charts. Take a look at the chart. Really nice action today. I'm going to zoom out a little bit to show you the setup that we've been highlighting in off the charts. If you take a look on a weekly chart, you can see it. Sort of this upper level downtrend that's been in place. This is a stock with a really strong macro uptrend that's been in place since November when the market put in that well-publicized pivot low. Strong uptrend, but then has been more recently it's been in a short-term downtrend. Go back to the daily chart. You can also see it. And we love these descending trend lines on strong stocks because they give you a great area to enter these stocks, when you're not chasing extreme strength. So you draw your downtrend line here, and you can see when we highlighted it on off the charts. We highlighted it last Thursday after it poked its head above that downtrend line. And then on Friday, it extended above to give you a nice start to that trade idea. And then today, really explosive acceleration for WDC. So that's a prime-time setup from our Off the Charts newsletter, and hopefully a preview of things to come with the new version of Off the Charts that we're launching tonight after the close. But another name that we've talked about in some videos, morning calls, and things like that, Las Vegas Sands, LVS. Really impressive 3-day move, 4-day move that sort of came out of nowhere. Sort of a sloppy chart been in place for LVS over the last few months. Not a lot of calculated setups. You did get a break above this pivot here that gave you a nice move, but more recently you've seen gap downs and gap ups that are sold and bought. But when you got a break above this pivot, that was a potential entry, and you've got a nice move above that. So good action there from LVS. We talked this morning about Solar City, about how it had such a really strong, potent move on Friday on revised guidance, and you'd think that potentially some of that revised guidance and some of that optimism in the sector could spill over into other stocks in the group. And some of the small cap names like TSL, JKS, YGE, those were a little bit extended. But FSLR, the biggest name in the group, is one that has a little bit more of a calculated lower level setup. It's back above its 8 and 21-day moving averages and got a little boost off its 8-day today with a nice acceleration, opened lower and engulfed the previous day's bar. And you just got to watch this pivot now on FSLR. 44, basically 45 is the area to watch. So I think above 45, I think you could see FSLR get some momentum and get closer to filling. It's almost filled this gap, but I think it could get all the way and potentially get higher. I think the solar sector yet, the results aren't really there, but I think optimism is increasing in the group and definitely a group to keep an eye on. SLB, another recent mention and off the charts and one we talked about in the morning call this morning. Really nice setup in this OIH. I think it's the leading component in the OIH ETF oil servicer. You can see a break above highs today. The pivot high we talked about this morning was 90.47. We got the break above that today, so that swing trade is triggered. Whole Foods market, just wanted to follow up on from a couple weeks ago and off the charts. During that market turmoil, you got a breakout failure, and then the following day you got some downside follow-through. And what I talked about on those days was the fact that you have to judge this candlestick in the context of what the market was doing on those days. On this day that Whole Foods market had the breakout failure, the market was extremely weak. Whole Foods looked like it wanted to break out, but just succumbed to that broader market weakness. So the breakout failure doesn't exactly have as much of a bearish tendency as if it happened just in maybe a flat tape or a strong tape. But we saw a really nice bounce here on Whole Foods. It's taken it back with 3 really nice, impressive candlesticks, triggered that breakout. So another great trade idea that was listed and off the charts that's working well. Just to follow up on gold that I talked about this morning in the morning call. We asked this morning whether or not gold could hold the gap up. It couldn't, amid market turmoil last week, hold any positive days. That was a red flag on Tuesday, the day that the NASDAQ was down 2%. You saw gold initially push higher but then close negative. That was the red flag. Led to a 4-day sell-off. This morning opened sharply higher to close most of that gap from last week and from Friday. But then today during the session, closed weak again as the market was able to bounce. It closed with very marginal gains. So this is one that definitely looks like it's headed lower to me. And just to follow up with some news on Netflix. Netflix is one that during that carnage in tech, Netflix was very weak. 3 really harsh down days in Netflix. Sort of told you this might be one that has fallen out of favor a little bit. But when the market bounced back, Netflix bounced back pretty well. And then the news today reports were that Netflix is in negotiations with some cable companies to offer their service through cable boxes. So that could be a big coup for Netflix. It's been a long line of coups for Netflix in terms of getting their service placed on different avenues, and cable boxes could be the next one. So big moves being made by Netflix and a really impressive gain in that stock today. And then Mark Sperling's trade idea of the week this morning. I helped put it together. AMAT, another one that was listed and off the charts. Our bread and butter type of pattern from the active trader course. A gap up, holds the gap, gives the short-term moving averages time to play catch up and support the stock. And then now the trigger price we had on that trade idea of the week was 1809, which was Friday's high. Crept above that today, closed 1 cent above it. So it looks like it still has some juice left in the tank. It's a large cap semiconductor. It's basically a parts supplier for semiconductors for flat panel displays. They made an acquisition of a big Japanese supplier on September 24th that triggered this gap up. Generally speaking, this is a good large cap stock that a lot of analysts are very positive on that takeover, on that merger, basically a stock for stock merger with that Japanese company. So the fundamental story and the technical story are lining up right now for AMAT. And I think it's definitely one to keep on your radar as a swing trade to the long side. Now to get into a little piece of business. As many of you might know if you follow the blog, if you're on the VTF, or if you follow our community on Twitter or anything like that, we've been talking about the rebranding, the relaunch of our Off the Charts newsletter. And we're really excited about the changes that are taking place there. I'll go over a few of them. One of the big things is that currently Off the Charts shares tons of trade ideas. It's a great newsletter, very popular, and I think very valuable. We don't think there's anything wrong with it. We just thought there was room for improvement. And one way we thought there was room for improvement was with adding a watch list of long and short ideas. Currently, we just sort of present the ideas. We highlight entry levels. We don't really highlight a ton of firm targets, firm stops. We monitor the trade ideas and we give you updates, but there was no real formal follow-up on the levels that are presented in those trade ideas. And starting tonight, we're going to have a watch list in every newsletter of all open and just open trade ideas, both the long and short side, and ones that are recently removed and added to our watch list. So if a stock was highlighted 3 weeks ago and still hasn't hit its target, it's just sort of hanging around, we'll continue to have it in that watch list, in that table, so that you can do a better job of being patient, following up with the idea, not letting it go off your radar just because it hasn't really had great impressive price action in the short term. I think an important part of being a successful trader is patience, discipline, things like that. And we hope the watch list will help you keep things on your radar and achieve those goals as a trader. Another big thing is we're adding an extra night to Off the Charts. So currently Off the Charts is sent out Monday through Thursday nights at 8 p.m. We are adding Sunday night to that rotation. So it'll be Sunday night through Thursday night every night of the week. You know, some people said, are you adding Friday night? We decided to send it out on Sunday nights just to give you, we can perhaps see where the futures are, see what some of the headlines are over the weekend, to see what the market's doing. We decided to send that out Sunday night to give you a good game plan, some good preparation for the upcoming week, arm you with some trade ideas in the context of what the broader market's doing, so that you can enter each and every week with a good game plan, a good set of trade ideas. The third thing that we're doing, we're going to have increased collaboration and input from other members of the T3 Live team into Off the Charts. So right now, Scott Redler and his team, including myself, have helped put together Off the Charts every night with ideas, basically based on our perspective. But we're now going to require and solicit more input from the rest of the team to give Off the Chart subscribers a more diverse set of trade ideas. So we're going to get input from Rob Smith about his in the black trading strategy, where he's looking at inside bars and time frame continuity and all that type of stuff. And then we're going to get input from Mike Lee and Steve LeVay on more high momentum type ideas that you could potentially look to trade in the morning. Trade the morning as their mentoring room. There's going to be a universal philosophy that we generally follow in all of our courses, that we, when possible, like to follow trends, and we like to have setups that have very calculated risk reward and defined entries and targets and stops. But there is some wiggle room there for different ideas based on different philosophies, and the increased collaboration we hope will just add to the value of that product. And the last thing we're going to do is, I don't think we do a bad job of this now, but I think we focus a lot on some big name stocks, on the Apples, the Googles, the Facebooks, the Teslas of the world, the stocks that everybody's watching. It doesn't mean that we'll never highlight those in the future. If they have good setups, we'll highlight them. If they're in play, we'll highlight them. But we're going to do a better job of going off the beaten path sometimes, doing our research, finding the cleanest setups, no matter whether or not they're highly followed symbols or highly in the headlines. And we're going to give you those best setups, and we're going to give you ones that we can identify really attractive risk-reward type scenarios, and those are the setups that we're going to highlight on Off the Charts. These are all just trade ideas. These are not obviously solicitations to buy or sell securities. That's the disclaimer we always have to provide. These are ideas that we hope can help you achieve more success in your trading. We're not going to always see our contributors trade them with the defined entries and targets and stops that are included in the newsletter. But that's why you follow us on Twitter, you maybe subscribe to the virtual trading floor, and why you listen to the follow-up commentary on all ideas on Off the Charts, because environments can change, but you should do your best to be objective, watch the price action, and try to do your best to stick with ideas until there's something that occurs that makes those ideas sort of null and invalid. But those are just a few of the things we're adding to Off the Charts. We're excited to launch the first edition tonight. If you're a subscriber, look out for it in your inbox. If you're not a subscriber, it's a $30 a month product, $1 a day, so not a prohibitive cost. We like to have an entry-level type product like that to give all types and experience levels of traders, of investors, a chance to be subscribers with us and get some of our ideas. So we hope you'll take a look at that, and give us some feedback on the new version of Off the Charts. This has been John Darsie, your Editor-in-Chief, here for the Daily Recap. We'll see you back here tomorrow morning for the morning call.